Hi, welcome to CPA News Today, May the 11th from CPA Magazine. The need for CPA audits and reviews is expected to explode based on the Jumpstart Our Business Startups Act, known as the Jobs Act. Creates an offering exemption of Section 4 of the Securities Act of 1933. It's amended to permit crowdfunding of up to $1 million investments in the stock of companies defined as emerging growth companies. They can be widely marketed, and non-accredited investors may invest at least $2,000 each. The Jobs Act, signed April 5th, recognizes crowdfunding as an offering of unregistered securities through a registered internet intermediary website or a broker-dealer from a large pool of investors. With only 8 months remaining before the SEC issues its final standards for crowdfunding, the time for CPAs to begin preparing is now. Different offering amounts have different SEC standards. If an EGC plans on raising between $100,000 and $500,000, their financial statements would have to be reviewed by a CPA. Those looking to raise more than $500,000 up to $1 million are required to have their financial statements audited. Prior to enactment of the Jobs Act, entrepreneurs and charities had success on the internet raising money from contributors in exchange for rewards or completed products. Carl Esposti, founder of crowdsourcing.org, runs the research firm Massolution, which identified 452 crowdfunding platforms worldwide. Esposti told CPA Magazine that these platforms raised almost $1.5 billion in 2011. To learn more about the impact of the Jobs Act and what it could mean for CPAs, we talked with David Marlett, founder of the National Crowdfunding Association. Marlett is an attorney and non-practicing CPA. He said, "This entirely revolutionizes our financial system, this 8 decades-old law since the 1933 SEC Act. For CPAs with an entrepreneur interest, it's a brave new world. If you're a guy like me, it raises your spirits. So much of the economy is determined by expectations, how we feel about hope. Now a startup company can believe, I have the opportunity to be like everyone." The big unknown at this point is the audit fees when the CPAs are required to audit a startup's financials with virtually no activity. Douglas Elinoff, a member of the law firm Elinoff, Grossman & Scholl, who attended meetings between several department heads of the SEC and the crowdfunding industry in April, told CPA Magazine a $25,000 audit fee for a private placement, which has been normal over the last 20 years, will be too high for a crowdfunding deal. Elinoff believes there will be CPAs who will spread their cost over several crowdfunding deals and get the opportunity to provide them. Richard Salute, a CPA with J.H. Cohn in New York, told CPA Magazine that you can't speculate on the audit cost. He said, 99% of the time there must be comfort given outside of the financials. There are also tax implications for the investor and the entity. The real question is going to be that historical information is not as essential as the business plan and how management can execute the plan. There may be sustainability plans that predict a near-term business model which will help toward valuation and which will drive this asset class. To my way of thinking, it's not just the fees, it's the value you attribute to the stock. An audit under generally accepted auditing standards requires 100 to 300 hours at $150 an hour or up to $250 an hour. A review would be much less, but you can't speculate on it, Salute warned. The Jobs Act prevents states from policing crowdfunding offerings until an alleged fraud has been committed. People will now need to do more research before they make these crowdfunding investments. Here's what I find so fascinating, Marlette said. Crowdfunding has taken off in Europe for 2 years and donated crowdfunding in the United States mainly in 2011. The two main websites, Indiegogo.com and Kickstarter.com, raised $180 million. The fraud rate has been 2%. The daylight effect that the internet brings us limits it to 2% without regulation. I am so enthused by that. Human nature has its devious side, but social media is protecting us against ourselves. So fraud should not be a limiting factor. This changing environment has revealed a tremendous opportunity for CPAs. The Jobs Act will now introduce new entrepreneurs to the world of professional accounting much earlier, causing a rise in demand for CPAs. Marlette said, insurance agents and attorneys are interested in this, but CPAs are the ones poised to make the most money. Suddenly, the issuer cannot just use QuickBooks. You can be an entrepreneur CPA on the internet to get companies dressed up for the dance. This now commonizes finance for the average person. I would not be surprised if QuickBooks did not have a direct export to the portals someday. The new market focus for CPAs will require new skills and the enhancement of old skills. Marlette emphasized how important it is for CPAs to mobilize, be proactive, and take this new challenge head-on immediately. The one message is to come join us. Help us to do this right now, urged Marlette. The first rules will come out in 60 days, and there will be 90 days of comment after that. Advisors said they will need to be audited, and that is it. It is a tremendous opportunity to be ringleaders in this new space. I need the CPA world to help us help them. That sums up the CPA news for today. I'm Steele Rose. Thanks for reading. Have a great day.